have this conversation. Cryptocurrency. President Biden, I believe, has talked about taxing crypto to pay for infrastructure. What do you feel about the president's idea to tax crypto, and what is your thoughts on how that could impact the space?
Yeah, it reminds me of Liam Neeson in Taken. Good luck. Right? Like, good luck with that. And good luck with the transaction tax on stock purchases or sales, which I know he's talking about as well. Yeah. You want to talk about how to cripple the industry, that's the way to do it. But the lobby, the money management lobby, the investment industry lobby is never going to let any of that happen. And he could tax crypto if he wants, but you know how hard it is to track crypto, even though he may force the Coinbases of the world to disclose their records. I think that is a shot across the bow, but an empty warning. It's a lot harder than it seems. And there is a ton of lobbyists between him and that ever happening, and that happening in the next 2.5 years or so, I don't think is going to be realistic at all. And if it were to go through, I think that the industry would be up in arms about it to a point where it would debilitate any sort of hopes for any sort of continuation of the legacy of the Biden administration going forward. That's a really tough task.
Okay, there was an article in CNBC about tax loopholes that are helping Bitcoin holders, and it goes into the wash rule. Can you explain what the actual wash sales rule is and how it can help people in Bitcoin and saving taxes?
Yeah, so my buddy Tyrone Ross is quoted in this article. A smart piece of advice. Tyrone is the CEO of OnRamp, tremendous guy who's really an expert in this. But the wash sale, and it applies to not just stocks, it applies to real estate as well. If you sell a stock, there's like you have to wait 30 days to reinvest those profits before you buy another one. Otherwise, you're going to get hit with a short-term capital gains tax. So you have to. In the crypto world, that doesn't exist yet. So if you wanted to take a loss on a token that you've maybe bought high and then you want to sell low, you could carry that loss forward for as many years as you want and apply it to your gains going forward. Similarly, you could take your gains from selling a crypto token and apply them already to another sale without being hit by that higher tax. So the wash sale rule applies to stocks. It applies to some areas of the real estate market, but not to cryptos, not yet. That is legislation that I could see potentially happening in the next few months, few years.
Yeah. As a media company, last year when the market crashed, did you feel tempted to buy into the meme stock or meme kind of content generation, or what did you do to combat that, to stay the course?
Yeah, I took a leather belt and I bit it as hard as I could for as long as I could to not do it. No, I told you, I made my mistakes. I made my mistakes in 99. Chasing pets.com or whatever that was. Yeah. And companies that aren't even around anymore. I made my mistakes in 2008, 2009, buying blue chip companies. But then I also learned what was actually happening with this Federal Reserve and this monetary policy support, the likes of which we've never seen, and these trillions of dollars flooding in. And I remember very clearly, I was at CNN working there in 2008, 2009 during that financial crisis, when all of a sudden interest rates dropped to zero, the Fed started buying government bonds and laying the safety net across the entire capital markets. Mm-hmm. I remember my anchor at the time and a few other people saying, back up the truck and start buying stock, because they're never going to let this go down. Turns out they were right. That was one of the greatest 12-year rallies of all time. Got interrupted last year during COVID. And now we just went on another 100% run in the S&P 500 from the lows of late March 2020. So I get tempted to do that, but I know I'm terrible at trading. I don't have the time. And also I'm the editor-in-chief of Investopedia. I'm out there talking a lot about the market, talking a lot about companies and stocks. I don't want the conflicts of interest in owning individual equities, especially ones like that are so hot. Like I'll own something long-term, but I'm not in it for the trade because I'm terrible at it. And I want to be, clear heart, clear eyes, open heart, as they say, so I don't have that conflict of interest when I'm talking about it.
Let me reset the room real quick. 4,100 people on YouTube. We appreciate you guys. If you could hit the like button, greatly appreciate it. Like the video, share it. Let me ask you this question. So, this is something that I've always been concerned about. Bear markets usually, and correct me if I'm wrong, bull markets usually last 7 years. And then bear markets last like 18 months on average, I believe, around that time. So we were in a 12-year bull market, which, like you said, is like the longest in history. And then we had the shortest bear market in history last year, which was only a few months. Mm-hmm. And now we're back in a bull market. So obviously that was a lot due to the government just printing money at unprecedented rate and pumped a lot of money into the economy, which made us go back and helped us go back into a bull market. But it's one of these things where at some point in my brain, we have to go back into a prolonged bear market, or is that no longer the case where it's like, okay, bear markets might not happen anymore, like how they used to happen?
Great question. My good buddy JC Peretz likes to say there's always a bear market somewhere. So if you look around the market, and it's a global market, and it's a market of stocks, right? There's the stock market, but we always talk about the Dow, the S&P, the Russell, but then there's the global market of stocks. And if you look around, the Hang Seng fell 10% last week. Yeah. That's a technical correction. You look at the meme stocks, AMC and GameStop, even though they're up, whatever, 1,400, 1,200%, they're down 45, 50% from their highs. Crypto is in a technical bear market. There's always a bear market happening. It just depends on the asset class you're looking at or where you're looking around the world. So there's that. Are we going to have a bear market in the United States in the S&P 500 or the Dow? Yeah, we are going to have one. The fact is, though, and you mentioned it, that was the cutest little bear market in history. It hurt, that 35% drop, but it was cute. It lasted 5 minutes, right? Again, we had the support. But there's also this, and this is important. There are so many passive investors in the stock market right now, passively investing through their 401k, through their Roth IRA, through their own brokerage accounts. They're just setting and forgetting it through the robo-advisors. There's just a ton of money sitting there in the Vanguards and the Fidelity index funds of the world, right? It's heavy. It's like a big, heavy ship. It takes a lot to move that whole ship down and get passive investors to sell. Everybody's got a threshold, but for passive investors, this household across the United States and across the world sitting on all of this stock income, people have a very deep threshold before they're ready to throw in their hand. So we'll get a bear market. It may come soon, right? This is the worst 2 months of the stock market right now, August and September. We may get a correction here. We may fall into a bear. I doubt it. But in general, I just think the market is so heavy that we're going to get these things, but they're not going to last long. And the government now has this moral hazard where they're just not letting things fall that far. They're not letting the capital markets fall apart because they don't want a 2008, 2009 situation again.
Yeah. And if they did, I think in 2020, last year, we would have crashed through the 50% of the Dow. And what people are not remembering, in 1970, 1980, there wasn't as much quantitative easing. But as you mentioned, Caleb, the amount of people that are buying automatically and then the preaching of index funds was not present. Those two factors, like 1929, everyone was not automatically invested into 401ks or mutual fund plans. So those levers are dramatically different. And then, but the quantitative easing thing, because I know Rashad is a pessimist, like Rashad will make you prove your case to him. And the thing is, like, the quantitative easing part is tough because now you're building a house of cards, but as Caleb mentioned, you can't stop the quantitative easing, because if we do and the floor falls from underneath it, it'll be disastrous for many industries, many people, and many jobs will go away. So now it's this thing that you have to kind of keep in place, and probably for the next 20 something years, it will have to be in place until we reach a point of no return.
My graduates from my school being Forbes, bag drop.
Bag drop.
A mic drop, bag drop.
Bag drop.